According to Wire, France's domestic intelligence agency, the DGSI, is preparing to phase out Palantir's platforms in favor of a French alternative from ChapsVision, and this development has important implications for investors who follow Palantir Technologies. According to Wire News, this move is part of a broader European trend of governments and major institutions reassessing their dependence on United States technology providers, particularly in sensitive areas like intelligence, defense, and large-scale data analytics. For stock market participants, this is a reminder that Palantir's business is heavily exposed to political decisions, national security priorities, and shifting regulatory landscapes, not just traditional commercial competition. Wire mentions that France has been especially proactive in reducing reliance on foreign software and cloud services. Over recent years, French authorities have pushed domestic or European alternatives in video conferencing, office productivity tools, and now, in advanced data platforms used by intelligence services. The DGSI's decision to adopt ChapsVision follows a similar announcement from Germany's BFE, which also opted for the same French provider. From an investor perspective, the key question is how material this trend is for Palantir's long-term revenue growth and valuation. Palantir's narrative in public markets has largely centered on its position as a strategic software supplier for Western governments and their allies. Government contracts tend to be sticky, high margin, and often expand over time as agencies deepen their usage. However, what we are seeing in Europe suggests that political sovereignty and data localization can override purely technical or commercial benefits. According to Wire, French Prime Minister Sébastien Lecornu explicitly framed the shift as a sovereignty and security imperative, saying that France must rely on its own AI models and not tools developed by foreign powers. For investors, that language is important. It signals that in certain regions, winning or retaining contracts may be less about Palantir's capabilities and more about geopolitics, industrial policy, and regulatory pressure. For holders of PLTR stock, there are several angles to consider. First, revenue risk and regional concentration. Palantir's government business spans the United States, the United Kingdom, and multiple European and allied countries. Losing or gradually shrinking contracts within core European intelligence communities could cap growth in that region or create periodic headline risk. Even if individual contracts are not enormous compared with Palantir's total addressable market, they can matter to sentiment because they challenge the perception of Palantir as the default choice for Western intelligence and defense analytics. Second, the strategic precedent effect. When one major European agency publicly announces a shift away from Palantir, it can act as a precedent for other agencies that already have internal concerns about data sovereignty, or that face domestic political pressure to favor local vendors. Now that both France's DGSI and Germany's BFE have aligned on ChapsVision, investors should watch whether other European security, law enforcement, or defense bodies follow the same path over the next few years. Third, competitive positioning in a sovereignty-focused world. Palantir's platform is differentiated by its integration of data management, analytics, and decision support tools, and by its deep embedding with customer workflows. But for intelligence agencies, the trade-off between best-in-class capability and control over data, infrastructure, and source code can tilt towards sovereignty. That gives room for local competitors like ChapsVision to grow, even if their technology lags on some dimensions. In practical terms, this suggests that Palantir may have to respond in a few ways. It could pursue more aggressive partnerships with domestic integrators or national cloud providers in Europe. It could offer stronger guarantees or legal structures around data residency, source code access, and operational control, or it might focus more heavily on markets where geopolitical alignment and trust in U.S. vendors are stronger, such as within the Five Eyes Alliance or select Asian partners. From the valuation standpoint, PLTR has often traded at a premium multiple based on expectations of durable, compounding government revenue and an expanding commercial footprint. The Wired story highlights a risk to the government side of that thesis, that in certain jurisdictions, growth may be structurally constrained or even reversed due to political and regulatory choices. When investors model Palantir's long-term growth, it may be prudent to assume slower or more volatile government expansion in continental Europe, and to stress test scenarios where some contracts are not renewed or are replaced over time. On the other hand, it is important not to overreact. The DGSI and BFE decisions are meaningful signals, but they do not imply that Palantir is being rejected across all European institutions. Many defense and security relationships are long-standing and technically complex. Transitioning from Palantir's platforms to an alternative is costly, risky, and time-consuming. A phased, multi-year replacement suggests that Palantir will still generate revenue during the transition period and may continue to provide services in less politically sensitive domains. In addition, investors should separate the European sovereignty story from Palantir's broader opportunities. In the United States, Palantir has deep ties with defense, intelligence, and civilian agencies, and Washington's strategic posture often favors close collaboration with domestic technology firms. In commercial markets, Palantir has been pushing its foundry and artificial intelligence platforms into finance, manufacturing, healthcare, and energy, areas where the sovereignty narrative is less pronounced, although still relevant for certain regulated industries. According to Wired, the broader context is a European shift away from U.S. technology due to surveillance and security concerns. For investors, this is not only about Palantir. It is part of a macro trend that affects cloud platforms, collaboration tools, and data infrastructure providers. The European Union's digital strategy, privacy regulations, and cloud sovereignty initiatives all aim to create more autonomous digital infrastructure. That environment naturally creates headwinds for non-European vendors that deal with the most sensitive data. For Palantir shareholders, this makes it crucial to monitor policy developments in Brussels, Paris, Berlin, and other capitals, not just company-specific news. Regulatory frameworks around data sovereignty, cross-border data flows, and the use of foreign technology in critical infrastructure can function as indirect constraints on Palantir's growth. At the same time, the company's ability to adapt its go-to-market strategy, address regulatory concerns, and build local partnerships will be a key differentiator. Now, let's broaden the lens and connect this to market psychology. PLTR has often been a sentiment-driven stock. Positive headlines about big contract wins, military deployments, or AI platform launches can push it higher, while news about contract losses, political scrutiny, or civil liberties controversies can weigh on it. The Wired report about France and Germany opting for ChapsVision is likely to be interpreted by the market less on the immediate revenue impact and more on what it might imply for Palantir's long-term dominance narrative. Investors who take a long-term view should ask themselves a few questions. Do they believe Palantir can remain a key strategic player for core U.S. and allied government agencies despite growing sovereignty concerns in some regions? Do they think Palantir's commercial business, particularly in the private sector, can grow large enough to offset slower or more competitive government growth in parts of Europe? And do they see Palantir's product roadmap in artificial intelligence and machine learning as strong enough to keep the company ahead of both global and local competitors? Another dimension is reputational and political risk. In the same Wired piece, other stories focus on surveillance technologies, facial recognition at Madison Square Garden, biometric scanning in the United Kingdom for asylum seekers, and face scanners in San Francisco bars. While those stories are not directly about Palantir, they contribute to an ongoing public debate around data, surveillance, and civil liberties. Palantir's brand is closely associated with large-scale data analysis and government intelligence work. Heightened public concern about surveillance can trigger greater scrutiny of companies that operate in this space. For investors, this means that Palantir's risk profile is not purely financial. Regulatory crackdowns, stricter oversight, or negative public campaigns could influence which contracts governments are willing to sign, renew, or publicize. Meanwhile, some commercial clients, especially consumer-facing brands, may be sensitive to any association with controversial surveillance technologies. On the flip side, from a pure demand standpoint, the same trends driving concern also create business opportunities. Governments and enterprises increasingly want to integrate multiple data sources, manage security threats, and deploy AI-driven insights. Vendors that can offer robust, secure, and explainable data platforms may be well-positioned. The challenge for Palantir is to show that its offerings can meet both operational needs and evolving expectations around privacy, transparency, and accountability. For investors looking at PLTR today, several practical takeaways emerge from the Wired coverage. First, Europe is becoming a more complex environment for U.S. data and AI vendors, especially in security and intelligence. That is a structural consideration that belongs in any long-term thesis on Palantir. Second, contract headlines, whether positive or negative, may increasingly reflect geopolitical and regulatory forces rather than just competitive performance. This can make Palantir's revenue trajectory bumpier and harder to model. Third, Palantir's relative strength may shift more heavily toward regions and sectors where U.S. vendors are perceived as aligned with national interests or where sovereignty concerns can be addressed through local partnerships, infrastructure choices, or governance frameworks. For traders who focus on shorter-term movements, news like the DGSI and BFE decisions can act as catalysts. Negative sentiment or concerns about growth ceilings in Europe might create volatility. For longer-term investors, episodes of pessimism around European contracts could present entry points, provided they still believe in Palantir's core capabilities, its positioning in U.S. government markets, and its potential to scale in the commercial space. It is also worth noting that the broader technology landscape is evolving. Many countries, not just in Europe but also in Asia and the Middle East, are exploring their own AI and data platforms. Sovereign AI has become a popular concept, referring to locally owned data, models, and infrastructure. Palantir will have to navigate this world by balancing its identity as a U.S. company with an ability to build trusted, sometimes localized, solutions abroad. According to Wire, the French Prime Minister's comments about relying on domestic AI models are emblematic of that global shift. For PLTR investors, this may signal that the era of relatively frictionless expansion into foreign intelligence markets is ending. The next phase will likely require more nuanced strategies, more collaboration with local ecosystems, and potentially more compromises on full control of the stack. Ultimately, the story of Palantir and European agencies like DGSI and BFE is not purely one of loss. It is an illustration of how the company's fortunes are interwoven with geopolitics, national industrial strategies, and public attitudes toward surveillance. For those following the stock, understanding these forces is just as important as reading earnings reports or tracking contract announcements. As always, this analysis is for informational purposes only and does not constitute investment advice. Investors should do their own research, consider their risk tolerance, and, if necessary, consult a qualified financial professional before making decisions about Palantir or any other security. Thanks for listening to today's episode. If you found this discussion useful, consider subscribing and sharing the podcast so you don't miss future deep dives into the stories behind the stocks you follow.